Hi, and welcome to the recording of Is a Downturn Inevitable? A downturn is inevitable. We just don't know if it's this year, 2 years, 3 years, 5 years, 10 years. What's your thoughts on that? When I'm running the live show, it's always a good debate, right? One thing we've got to be careful of, though, in the UK in particular, we're always good at talking ourselves into anything, aren't we? And the whole point of today is not so much what lies ahead, but getting your business prepared for any downturn. We don't like using the recession words. We'll just call it a downturn. So that's what today is all about. It's not so much as a downturn inevitable because everything is cyclical. It's all about getting your business ready for it. But let's have a look at what could cause disruption, where that actually comes from, what impacts us here in the UK. So at the time of recording, this is the obvious one. The thing in the Middle East is kicking off. There doesn't appear to be any resolve at sight at the time of recording, obviously. And we just don't know how this is going to impact our businesses and our economies, short, medium, and long term. We just don't know, right? So it's a factor. But then if we look at COVID-19, basically the planet shut down, right? I mean, there's no way to describe it. The planet shut down. And, we were we prepared for that? Some were, most weren't, but we got around it. And, and here we are, right? And then before that, we had the 2008 financial crisis. And this is what cost me my business, right? And this is why I'm doing this whole presentation, because in the approach to the 2008 financial crisis, I had made some mistakes in my business. So it was a multi-million pound business. It was the largest chain of independent print centres in the country. The business was flying, making an absolute fortune. And the business failed in its 20th birthday, right? But the business failed because of me, right? It's still in the book how to get your business, but the business failed because of me. I made a number of mistakes, and the business was weak going into the 2008 2009 financial crisis, right? And the one thing that any downturn, any R word, um, will absolutely do is it will cull weak and injured businesses. And my business was weak going into 2008 financial crisis, and we didn't come out the other end. It's as simple as that. I mean, we should have, but my business wasn't prepared, and that's what I'm going to be sharing with you in this presentation. So that was the 2008 financial crisis. Then we've had World War II. And the point I'm trying to make here is there's always something. If we want to give ourselves an excuse for our business is bad because insert an excuse here, there will always be one. Now, being prepared or preparing for a downturn is actually preparing for an upturn. So if you go into a downturn strong, you're going to come out it stronger. Fact. So is a downturn looming? Who knows? Let's just say yes, but when is where we put the question mark. Let's look at what to do about it now. Because most business owners, 99% of business owners, 99% actually watching this, will do nothing until the event is upon us. Sorry, guys, too late, right? The time to prepare is now. So, what we're going to be covering in this recording, we're going to look at the signals. We all get warning signals of impending doom. It's whether we interpret them correctly. When others go quiet, you go loud. We look at that as well. Know your numbers. Obviously, there for number three. Number four, existing customers. Absolute gold. Always will be, always have, downturn or not. Number five, ditch the bad customers. Get the awkward ones out the way now. Number six, get your pricing right now. Get your pricing right now because if there is a downturn and you need to adjust your prices because of low margin, it ain't going to happen. Let's look at lean operations, number seven. Cash is king. We're going to focus that number eight. We're going to look at diversifying to make sure your business isn't relying on one key area, one key product, if it's possible. Some businesses can, some businesses can't. And then number 10 is all about if you do have to make cuts, you're making smart cuts, not blind based on emotion. So that's going to be the 10 topics. Now, I'm going to run through these quite quickly. So my advice would be is drop me a note wherever you're reading this or watching this recording. Drop me a note. It'll be either be on LinkedIn, it'll be a blog post or YouTube, whatever it might be. Drop me a note and I'll send you the presentation, which has got all the slide notes you can actually read through. So let's kick off. Let's talk about reading the signals, right? So your job as a leader is to separate the signals from the noise. There's always a lot of noise and crap out there. So it's not to panic, it's not to bury your head in the sand. It's to find that middle ground because the truth usually sits in between the two. The real indicators an economic point of view is things like the UK Consumer Confidence Index, Bank of England base rate decisions, sector-specific PMI data, all these kind of things that you probably just roll your eyes at right now, right? So they're good economic indicators, but what I want to focus on is what we could call maybe the micro indicators, and that's what happens within your business, okay? So start to look at what's happening with your own pipeline, for example. Nice busy pipeline, lots of inquiries coming in, it starts to slow down. Warning sign number one, little tap on the shoulder that all's not well. Maybe payment times. Clients that were paying in 30 days are now taking 45 to 60 days. Again, that's another indicator that all is not well, right? Customers now get a little bit more price sensitive. Clients that were normally quite happy to pay a £500 for that item are now questioning the price. Is there any alternatives? All these are good indicators that there could be some troubling times ahead. Okay, so look for the red flags in your business, right? I put down here the media profits and fear. I think it was Rupert Murdoch famously said a good number of years ago, good news does not sell newspapers. The media is driven by bad news, right? Daily Express is a nightmare for it. So be very, very mindful what you read in the media and take it with the proverbial pinch of salt. Look out for the real indicators, and that's what's in your business. Okay. Now, you don't need a crystal ball for this, but what you do need is to create the habit of looking at the indicators within your business and start to look for trends. Okay. That's why preparation is absolute key. So your action point for module one is quite simple. This week, right now, in fact, identify three economic or market indicators relevant to your business and commit to tracking them monthly. That's all you need to do, and that's module one. Dead easy, this, isn't it? Module two is where others go quiet, you go loud. So do not cut the marketing. That's what everybody else does, right? There might be a smaller pie, but you now have the opportunity to get a bigger slice of it because historical evidence shows us every single time that there's a downturn, it's the businesses that keep the marketing going that suffer less during a downturn and recover quicker at the other end. Now, consistent does not mean expensive, it means smart, right? Now, why do people cut the marketing when a downturn? When things get tight, why do they cut the marketing? And I'll tell you, it's because they don't know what's working. They see marketing as a cost, they're spending X thousands on marketing and they don't know what's working. Lean times come ahead, they see it as a cost and they cut it. So your mission, should you choose to accept it, is to get your marketing working consistently now so that you know every bit of marketing that's working in your business. What's the old quote? 50% of marketing is a waste of time, but which 50%? That's still as true today as it was back in the 50s. Big difference is today we've got analytics to know which 50% isn't working. 50% is not working, get rid of it. 50% that is working, that's what you start to focus on. It ain't rocket science, this, is it? So that when a downturn comes, you know confidently all your marketing's working. If you put £1 into marketing, you get £10 back. You put £1 into marketing, you get £20 back. So your action for module two is to audit your current marketing activity. Identify the one channel delivering the best return and protect that budget. That's non-negotiable. Then add to that, get the one channel that you know is not working and either tweak it and retest it or scrap it. Find out what 50% is working, what 50% is not. That's going to be crucial as if we move into a downturn. Number three, it's always going to be there. Know all your numbers. How many business owners know their exact numbers? Not many. Margins, gross profit, net profit, the four conversion rates. It's a really interesting one, right? This simple weekly habit of knowing those numbers and focusing on them will pay you back huge dividends because as it says here, you cannot manage what you do not measure, obviously, right? A lot of business owners get obsessed by their turnover, right? Okay, it's a figure, right? But a turnover means nothing because you can't control a turnover. People are like, what the hell are you talking about? Of course you can. No, you can't. The turnover is the consequence of other actions. There's four conversion rates you need to know. And then there is average order values, the number of transactions a customer gives you over the year, the average order value, what products they're using, what products they're not using. All that combined, that's what drives your turnover. So if you don't know the figures that drive your turnover, well, how the hell are you going to improve it? Right? So you've got to know all your numbers solidly so that when any downturn comes, you know exactly what you're focusing on, right? Build a simple dashboard, revenue, margin, conversion rates, debtors, credits, balances, um, everything. Review it weekly, not just quarterly, right? Don't make knee-jerk decisions weekly, but review your numbers weekly and quarterly, and then maybe make decisions quarterly. So what's your action this week? Calculate your gross margin per product or service line, not just for the business, but for per product. Identify your most profitable and your least profitable items. That could be products, it could be services, and you'll be surprised at the results. So that's your exercise for module number 3. Number 4 is all about existing customers, right? Our existing customers are absolute gold. In a downturn, new acquisition gets really hard and more expensive. The businesses that stay stable are the ones with a loyal, retained customer base. And a customer who feels seen and valued is almost impossible for a competitor to poach, even on price. So, what you want to do is get your existing customers and really, really look after them so that during a downturn, they're less likely to jump ship. Acquiring new customers is 5 to 7 times more expensive than existing one, right? So yes, of course, you still want to go for new customers, but do not sacrifice looking after your existing customers, right? Your best customers are already on your database. So now is the time to really deepen those relationships, check in personally, add unexpected value is always a good one. Just give away plenty of content, give away plenty of value, solve any problems they may have. There's a ton of things, right? Mark out or who rather is your top 20% of customers. Then look at what they have in common, right? Because people like them know people like them. Ask for referrals. So what's your action point for module 4? Contact your top 5 customers this week, not to sell them, but to genuinely check in with them. That one phone call could inadvertently be worth thousands to you now or later. Just as we want to look after our good customers, we want to get rid of the bad customers. You need to get comfortable doing this now. Why? Let's say you've got 10 clients that are just a nightmare, and we've all got them. You've got 10 clients that are a nightmare. Lots of time getting sucked up, very little margin, lots of grief, team don't like them, all the bad things, right? Then a downturn comes along. Most business owners will balk at trying to get rid of those customers. Oh, I can't get rid of any customers now. Okay, and that's not flawed logic, right? So what you want to do now is cull the bad customers just now, right? Like I say, very few businesses have the confidence to do that when lean times come in. That problem just gets worse. Think of the customers right now who fit this negative profile. Maybe they pay slow, always pushing back in price, high maintenance, lots of time, just all the stuff I've talked about. You want to realign those customers now or start to look at letting them go. Not all revenue is good revenue, right? Now, here's why this works against you. You're too busy spending time with these customers. You're not looking after your good customers. Lots of businesses fall into that trap. So letting go of the wrong customer is not a loss because it frees up time and resource to go and get more of the good customers. And you've already researched what the good customers have got in common so you can go and find more. But you don't have time to do that because you're too busy with the bad customers. you see how this works. So your action for module 5, list your top bottom 3 customers. And that might be by profitability, it might be by the time they suck up, whatever it is. Then for each one, decide, can we fix the relationship? Can we reprice it? Can we restructure it? Or do we just end it professionally and gracefully? 3 customers. Number 5 is to get your pricing right. Now, most businesses do tend to underprice, right? And not even the bravest of us will increase prices in a deeper downturn. So get the pricing right now. So when did you last increase your prices, right? A 5% increase can actually add 50% to the bottom line. And you're probably thinking, what? A 5% increase can add 50% to the bottom line? How's that even possible? So let's say you've got a turnover of 200K with a 10% net profit. That's 20,000 net profit. If you increase your price by 5%, right, that's an extra 10K. So your turnover now goes from 200 to 210. Happy days. But you've not increased any cost to your business. So that 10,000 extra turnover is all profit. That 10,000 net profit is straight onto your bottom. Is that 10,000 profit straight onto your bottom line? So your profit goes from 20 to 30K, a 50% increase in net profit, right? So you want to look at your prices because you will not increase your prices during a downturn. Most businesses are underpriced, so now's the time to check those prices. Review every product and service. Some will be able to increase, some won't. That's fine. It's your business. You decide. So your action point for this is identify one product or service that you have been underpricing, increase it by 5 or 10% for new customers starting maybe next month. Then test and measure it. Number 6, lean operations. Your business can never be too lean. Let's not kid ourselves. You know, leaks are nothing to be ashamed about. Not looking for them, well, that is something to be ashamed about. And it's all things like all the little subscriptions. Like we live in this subscription model world now. And yeah, that's fine to a degree. But it's all this, like it's only X a month, it's only Y a month, then all of a sudden it's that a month. So find the leaks now, plug the gaps, plug the profit. This is a great exercise to go back, get the recording, get the PDF document, and really focus on this one, right? Because every business is waste. Some hide in plain sight, unused subscriptions, inefficient processes, unnecessary steps. We've all got those in a business, but we're duplicating efforts, documents not updated. You think, well, I've got a system and process. Yeah, we wrote it 10 years ago, right? So every business is waste. Find it. A waste audit. A waste audit isn't about cutting corners, quite the opposite. It's about removing the friction that causes time. Look at all your overheads. And again, this is really easy to do now, right? All the overheads, all the running costs, all the expenses of a business, we're all using Xero and QuickBooks. You can get this in the click of a mouse now. It's easy, easy, easy to do, right? And then look at all your systems and processes. Where the things slow down? Where the things get duplicated? Where's the bottlenecks, right? How do we make it leaner? This can take months, maybe years to perfect. So you want to do it before there's a downturn. So your action point for this one, block off 2 hours this week to start a lean audit. List every recurring cost that you've got within your business and then rank them by impact and fix the top 3. That's all you have to do. Think that's a good investment of 2 hours of your time? Guarantee it is. Number 8, cash is king. Profit is not cash. Get the cash sorted now, right? Profit is not cash. It creates cash, but it's not the same, right? And we've got to be careful here, especially during a downturn, because profitable work is only profitable work when you get paid. As obvious as that sounds, people fall into this trap. If you raise an invoice for £10,000 and you're making a £2,000 net profit on that, by raising that invoice, you've just increased your P&L net profit by £2,000. That's great. So on paper, things look fantastic. But until that customer pays you, it's not there. As obvious as that sounds, right? So when we are getting our businesses prepared for a downturn, we want to make sure we've got a really, really good credit control system, right? We want to look at building cash reserves for a rainy day, right? Profitable businesses can still go under because cash is not profit. Build up your cash reserves. Start putting money aside into a business savings account. I've got lots of clients that do that, and it builds up to thousands over a period of time. Tighten your credit control. Do that now. And depending on your business, speak to your accountant about this. You might want to look at things like invoice factoring for cash flow purposes if you're carrying large debtor balances, etc. It unlocks cash that's already there, but speak to your accountant, get professional advice on this because with invoice factoring or invoice discounting, as it's called now, once you're in it, it's quite difficult to get out of it. So it's an option, but look at it very, very carefully. So your action point here is to review your debtor list today. Chase every overdue invoice this week and actually start to set up a system that's doing this, maybe sort of low touch to keep the credit control flowing, if you like. Calculate how much cash is sitting uncollected and go and get it and build that habit so that your debtor balances are as low as they realistically can be. A lot of businesses now are invoicing and collecting by direct debit. I think it's a great way to do business. So I would send you my invoice. I will tell you the due date is the end of April, and that's when the due date is, and I will collect it by direct debit 7 days after that. And I'm sending the invoice out to you in good time so that you've got a week or maybe 2 weeks to dispute anything. And if you don't, we collect it by direct debit. So you're giving the invoice in plenty of time and you're telling them what date it's going to be collected. That alone, if the cash is there, that alone helps people with their credit control. Just a thought. Number nine. Number nine's a difficult one for a lot of businesses, right? But it's a good one. So this can take time. So guess what? Let's start it today, right? Over reliance on one key client. If they go, well, so could you. Over reliance on one single market. If that changes, then that causes problems. Niche is good. Niche is good until it isn't. So let's look to see if this is possible for your business. Diversification. If you've got a customer that's any more than 20% of your revenue, that's a big vulnerability. That's a big risk, right? If you're in one single market, right? If I was working with a printing business recently that was in one single specific market. Now, it didn't need the print industry to hit hard times. It needed their industry that they supply to hit hard times. So they started diversifying into other markets. And why not? It doesn't mean doing everything. It just means having other opportunities, right? You'll know better than me what your business is. Is that an opportunity to diversify into new markets, but without diluting your main one? So your action point is identify one new revenue stream or customer segment or market that you could test over the next maybe 90 days. Make it small, make it low risk, and make it fast to launch. Test and measure it. If it works, great. If it doesn't, it doesn't. But you've tried, right? Number 10. Number 10 is the kind of preparing for the DEFCON 1 moment. So something's happened. There's, it's a financial crash is on the way or whatever it might be. Tough times are coming. All our work that we've done is now indicating that tough times are ahead. You've got to then act. Now, I'm going to be brutally honest with you. I already told you back at the 2008 financial crisis that that's what caused my business to fail. But it actually wasn't, right? It was only the start of it. If you've watched air crash investigations on the TV, you'll see that what causes the air crash is never one thing. It's always a series of events that cause the perfect storm, if you like. And yes, it was the financial crisis that caused my business to fail, but that was the trigger. What caused the business to fail was my reaction to it or lack of action to it. I was far too slow to react, right? And when you allow your business to be in harm's way at that particular time, emotion is the main driver and not logic. You want to flip that so that you're making the tough decisions now when you don't need to, so that you're making them rationally, logically, in the cool light of day. This is really important. So what you're really doing here, if this happens, we do this. If that happens, we do this. If this happens, we do that. Right? And you're looking for all these trigger points. Had I done that, I would have closed shops with 13 print centres, right? And probably half of them were not making money. So what do you do? Well, you close them. Well, but hang on a minute, my ego wouldn't allow me to do that. Oh, that's a failure. Failure's bad, right? I, well, I paid dearly for that one, didn't I? So it should have been years prior. If this happens, close this. If that, it's so obvious, isn't it? So if we close 7 print centres, either kept the property assets because we own the property or sell them, inject the money into the business, we would have stopped those loss-making centres and draining money from the ones that weren't making money. We could have cut back on staff. Now, nobody likes letting people go, right? For 1 second, nobody likes letting people go. I get that, right? But I didn't let people go, so I had to let the whole business go. So if you haven't prepared for a downturn, then emotion is going to be in the driving seat. And trust me, I have been there. It does not work. Logically create your plan. This happens, we do this. This happens, we do this, right? And then in the cool light of day, do not allow emotions to change it because your emotions will be pulling at you. Oh, it'll be fine. It'll come back. It'll be great. We don't need to let anybody go. We don't need to do this. We don't need to close that. Bollocks. You've decided this happens, this trigger, we do that. Stick to it. Anybody that works the stock market will be familiar with the process of called stop loss. This is what is. This is you building a stop loss. We're doing this, if this happens, to stop the losses. Panic cutting kills businesses. End of. The time to plan the cuts is now. And then you categorize all these costs. What's, protect revenue generating. Pause, you can even pause some stuff, non-essential, but still useful. Okay, we'll not bin it, we'll just pause it. Plan your cuts in advance. So your final action point. This week, go and categorize every overhead that you would protect, that you would pause, you would cut. Right? You're not doing anything just now. You're just maybe traffic lighting them. You've got all your expense and all your costs within the business. Red, amber, green. The green's the stuff that stays because you need it. The amber is okay, we'll decide and be close to the time. And the red is all the stuff that you would probably stop immediately should you hit that trigger point now. Final point, you're not doing this just now. You're just highlighting the ones that you could. Now, guarantee what will happen as you do this exercise, there will be stuff that you say, well, hang on a minute, we don't need this at all. We can cut it now. Happy days, get that for free. So that has been very quickly is the downturn inevitable recording. Choice is now yours. You can be very reactive and regret that, or you can prepare and then prosper. So my challenge to you is what one of those previous 10 actions can you relate to the most? Note it, act on it. Do it this week, right? You've turned up, you've watched this recording, your competitors didn't. When I ran this first workshop, 85%, 85 people booked onto the call. 10 turned up, right? What does that tell you, right? So if you're, part of the 10% that's actually looking at taking action now, you're already light years ahead of your competition. Is that a good place to be? I think it is. So just like any storm, there's no such a thing as bad weather, just inappropriate clothing. Probably heard that one a few times. Your business is exactly the same. So I would go for prepare and prosper. And that has been, is a downturn inevitable. What's your thoughts? What's your thoughts now about what we've covered? I'd be really keen to know what yours are. So reach out to me on LinkedIn, send me an email. I'd really like to know your thoughts. I hope you found that helpful. If you've got any questions, please reach out to me. And remember, don't leave it until tomorrow, right? Prepare for any potential storm. It's contingency planning. That's all it is. It's putting a contingency plan in place and it will be worth it. Hope that helps. Thanks for listening.